10 countries that the United States has the largest trading deficits with. The first is China. They have a deficit of about $300 billion. The second is Mexico, about $172 billion. And all the way at the end, number 10 is India with a $46 billion deficit. But the reasons why we have trade deficits with a lot of these countries are not what you think. You probably think if a country exports more to the United States than we export to them, that they have us over a barrel. And that if a country exports more than they import, then they have a higher quality of life than one that doesn't. Let me take apart these assumptions. Let's look at world happiness levels, and this chart is supplied by Visual Capitalists. The country that is closest to orange is the one that has more happiness. And look, China, they are the number one exporter. They are the number one manufacturer. They have a happiness level of 5.9, while the United States has 6.7. Canada has 6.8. Mexico actually has 7.0. China has the largest trade surplus of all, yet they are not the happiest country. They also have a much lower per capita income than the United States and other Western countries. We also have to compare what China and the US trade. By far, the thing we import most from China are machinery and mechanical appliances, a lot of components that support American manufacturing and make our products as cheap as they can be for the consumer. What do we export to China primarily? Agriculture, oil, chemicals, and of course, machinery and other mechanical appliances. Most likely, higher grade ones. At least during 2021, when things were a little bit more stable than they are now. But maybe there is wiggle room for China to import more goods from the United States. They have comparable economies. Our GDP is about 29 trillion. Theirs is 18 trillion. They are the second largest economy in the world. They could, I guess, ideally buy more American products. But you cannot use those excuses with Mexico or Canada. Our trade deficit with them is entirely different for why we have one with China. We are the world's largest economy with a GDP of almost $30 trillion, and we import $4 trillion. Let's look at Mexico's economy and their imports. They import $334 billion of goods from the United States. And Mexico's GDP is just $1.4 trillion. So they import about 22 to 23% of their entire economic output from the United States. The U.S. imports from Mexico $505 billion, of course, because America is a larger consumer, and that is less than 2% of America's GDP. So Mexico is devoting disproportionately more of its economy to the United States. And the same story goes for Canada. Their GDP is about $2 trillion, but they imported about $350 billion of U.S. goods, which is 17% of Canada's total GDP. The amount of goods that the United States imported from Canada, about $400 billion, is less than 1.5% of America's GDP. Think of it this way too. Canada's GDP is about $2 trillion. Mexico's GDP is about 1.4. If you add their GDPs together, that's about $3.5 trillion. That is still less than the entirety of American exports, which totals $4 trillion. But there are also other galactically important reasons for why Mexico and Canada have a trade deficit with us. Over 60% of U.S. oil imports come from Canada, totaling about $131 billion. We produce about 13.5 million barrels of oil every day, but we consume between 19 to 20 million. So Canada helps us more than any other country to fill that gap. Canada doesn't consume anywhere near as much oil as America, and they can meet their own energy needs. There is no 1 or even 10 resources that the United States has that Canada needs to the level of the United States needing their oil. So yeah, when you are the world's largest oil consumer by far, and your neighbor is one of the world's largest oil producers, you are inevitably going to have a trade deficit with them. Now, Mexico is a different reason. We use them as a manufacturing hub. Almost 23% of US-made cars are actually made in Mexico. So these cars are imported from Mexico at a lower price, and then they are sold to Americans or anyone else who's willing to buy on the world market for a hefty profit. And I agree, those factories should be in America. Those cars should be completely made in the United States. But the question is, are you willing to pay 20 to 30% or more for an American automobile? Because if that were to magically happen and every car manufacturer came back into the United States, we would start to see the prices of their cars go up. And guess what? Toyota, Volkswagen, and a bunch of other cars that are sold in the United States could up their prices too, as long as they are just less than these American-made cars. No matter how noble those intentions are, consumers would end up paying the price. And it would make Teslas look that much more appealing since they are American-made. Who knows? The last point I want to leave you with is it doesn't matter if we are importing more than we're exporting if we are getting a much higher return on investment from those imports. If I import, let's say, $1 billion of milk from all over the world, and I'm exporting only 800 million, it does look bad maybe. But if I'm able to refine and culture that milk and make $30 billion worth of cheese that my American consumer base eats, that's actually very profitable for everybody down the supply chain. In conclusion, the idea that we're exporting less than we're importing being a bad thing is an old concept of mercantilism, where you had to do that and have higher reserves of gold and silver than some other country. And guess what replaced that? The Industrial Revolution, the free market, and capitalism. The free market looks at mercantilism like a deceased, decaying relic that doesn't belong on the economic stage, especially in this century. I am the Geo Hussar. I talk about economics and geopolitics, and I converse about this with experts in the field. Thanks for watching.